going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over our watches for the week ahead. This watch list includes names like NVDA, Apple, AMD, Tesla, and Amazon. We're going to give you all the resistance and support points that you need for these stocks. That way you know exactly where to enter, where to take profits, and where to cut losses if you have to. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that since the last time we updated this chart, SPY has followed through from this bearish engulfing and moved over to the downside. Last Friday, it formed another bearish engulfing, which is exactly what happened here. You can see that this day fully engulfed the previous day, and it was a full red candle day, which means that bears were in full control. And this is the first time we've broken below the 10 and 20-day moving averages since about May 24th. Now, that last time that we broke, we managed to recover right above it and push higher. However, now we've spent 3 days below these levels, so we could potentially move over to the downside, and we're going to talk about those levels in just a little bit. But before we jump into those levels, let's talk about the CPI report that's expected this Thursday. So last week, the biggest event that took us down was Fitch's downgrade of America's credit rating. This week, the biggest event that can possibly move us up or down is going to be the CPI, or the inflation data report. If the CPI report does not meet the target of about 3.2%, and it comes in higher, for example, around 3.5 or 3.6%, then the market can indeed sell off, because inflation has been the biggest battle that we have been fighting all year long. If inflation starts ticking back up now, when the market is already feeling a little bit of discomfort, then we can see a strong downside sell to the bottom. Let's talk about those levels. If you are trading SPY for the week ahead, the biggest and most critical support you need us to stay above is going to be 445. If we move below that level, then the sell-off from last week will continue over to the downside. Obviously, bears are a lot more strong right now, because we can see that their volume is leading the way down. Every day that was red has much stronger volume than the green days, and you can see one example here, one example here, and one example here. So a lot of people are letting go of their positions and are starting to move us to the downside, and Apple's earnings was one of the biggest drivers down as well. We're going to talk about Apple's levels in just a little bit, but let's go back to SPY and talk about the upside price targets. If you are bullish on SPY, you're going to need a breakout above the 453 resistance. If we get a move above that point, then bulls will regain a little bit of confidence, and they may break us back above 454.80. At this point, if you have picked up call contracts, or if you have entered a long position, you can place a stop loss just below 453, because if we fail at 453, then the bulls lost their confidence and have given back their positions. If we move above 454.80, then our next price target is going to be 459.55. Now, where did we get that? That is simply the highest point that SPY reached in recent history. This was done in a pre-market day, and that is the biggest point that we need to break above. So if we break above 459.55, we would have broken above the 2023 highs, and we would move towards 462.50, which would be our next bullish price target. Now, keep in mind, it is unlikely that we do any of this without a strong catalyst, and there are multiple events happening this week. The most important event is going to be the CPI report, but there are other events that are happening as well, like the PPI report and the quarterly household debit and credit reports. So all these things are going to influence the market along with earnings. Now, last week we got earnings from the biggest companies, which were Amazon and Apple, and we're going to talk about their charts in just a little bit. But before we do that, let's jump into the first stock on our watch list, which is going to be NVIDIA. Now, let's start by talking about NVIDIA on the daily candles, where we can see that just like SPY, and we're going to see this trend along many other stocks right now, NVIDIA has fallen below its 10 and 20-day moving averages, which what the 10 and 20-day moving averages measure is the average price of the stock over the last 10 trading sessions or 10 trading days. So in this case, buyers are no longer willing to pay what they have been paying for the last 10 or 20 days, which means that the next strong support, which would be around the 50-day moving average. But just keep in mind, or you can see it on the chart, that although they've let go of those moving averages, they're still holding on to a price near those moving averages. So right now, this is a critical point for NVIDIA. If it fails to move above those levels within a quick enough period, buying confidence may diminish and they may move over to the lower side. Let's talk about those levels for NVIDIA. So if you are bullish on NVIDIA, you're not in bad shape just yet. As long as the stock is above 432, it is considered more on the bullish side. But just keep in mind it has been making lower highs. You can see that there was this high here, this high here, this high here, and right now we're making this high. So if NVIDIA keeps that track and moves over back to 432, and if it breaks below it, that would be making a lower low. We can see one lower low here and another here. So if it moves below 432, then it can see a downside price target of about 413 to 415. To the top side, NVIDIA would need to move back above 460.40 in order for it to retest all-time highs. So this is the highest point that NVIDIA ever made, and if it moves above it, then it's on its way towards 495 to 500. The next stock on our watch list is going to be Apple. Now, Apple, although they beat earnings, they still fell and moved lower, and many people are confused to why. And that is because this is the third quarter in a row in which Apple's revenue declines, and that's because of slowing smartphone sales. So Apple broke below its 10, 20, and 50-day moving averages for the first time since March of 2023. And here are some levels to focus on if you're looking at Apple for the next week. If you are bearish on the stock is most bearish below 186.60. This is going to be this level here. So you can see that as soon as we broke this level, the stock selling accelerated and volume increased dramatically. So we would need to move back above this support right here, which was formed back on 7/11. So if we can move above that level, which was 186.60, then buyer confidence may be restored, but we're not going to call it fully restored until it moves back above 192.40. If the stock moves back above 192.40, that would place it back above its 10, 20, and 50-day moving averages, and then it's on its way to testing 197.20. If you are bearish on the stock for a further decline, you need a move below 176.60 for a decline towards 170 to 171. The next stock on our watches is going to be AMD. AMD reported earnings last week, and yes, they were impressive. However, the stock is still somewhat flat, so investors are just unsure what to do right now. You can see that AMD formed a bearish engulfing on their daily chart. Now, bearish engulfings and any other type of pattern you may see on the market don't necessarily always have to follow through right away. We can see a perfect example of SPY's bearish engulfing right over here when the stock, or the index in this case, took 3 days before it broke and followed through on that bearish engulfing. So here in this case for AMD, we can be seeing the same potential signals. The stock made this bearish engulfing and now it's consolidating. Volume is weakening. There is one bullish signal on here though, and that's the fact that the stock is trading above its 10, 20, and 50-day moving averages. So if it can maintain above those levels and the market begins to reverse, this may be set up for a reversal, and here are some levels to focus on. If you are bullish on the stock, you need to move above 120.80 for a move to a price target of 125 to 125.50, and then the next price target would be around 132 to 133. Now this is an aggressive price target, and it's unlikely that AMD can move to that level this week alone. To the downside, you would need a break below 107 for the stock's downside continuation towards the psychological $100 support. Below that level, AMD can see 93 to 94. The next stock on our watches is going to be Tesla, and Tesla lost a key support last week, which is the 50-day moving average. And you can see that Monday, to start the week off, buyers were quick to jump in below that level, and they formed this bullish reversal candle. So this candle with a long wick at the bottom indicates that buyers, as soon as the stock hit this level, were quick to come in, and we can see that buying volume was strong. So this makes that point a very strong support, but we have some levels for you here to be exact. 238.55 is going to be the strongest support for Tesla going forward. If the stock moves below that level, it will be a quick ride towards 230 to 231. Tesla buyers are not going to be confident until first the stock moves above that 50-day moving average, and better yet above the 20 and 10-day moving averages. This would be 274 on the stock's chart. If the stock is above that level, the next price target to the top side would be around 285, and above 285 we do expect the stock to move towards 300. Now Tesla is moving lower this week based on the news that their CFO is stepping down. The next stock on our watches is going to be Amazon, which reported earnings last week. Now, Apple and Amazon both reported strong earnings, but Amazon jumped up while Apple jumped down. Why did this happen? It's because Apple's expectations for this quarter were much lower in comparison to their previous quarters, and Amazon's were actually some of the strongest expectations, and Amazon still crushed the results. So this is great news for the company, and now it's experiencing what we call a power earnings gap, and we have a full strategy on how to play that power earnings gap. You can take that in our course, which will be available in the description. Now, here are some levels for Amazon. If you are bullish on the stock, you would need it to stay above 136, preferably above 138.95, and that is because that's going to be the support that was formed today. You can see that the stock came to that level, formed that double bottom, and shot up. So you wouldn't want buyers to let go of that support, and if they do, we do have another support at 136. Below that level, it can begin a gap fill down. However, we do expect the stock to go up just simply because of their strong numbers, assuming that markets stay healthy. If markets can reverse and move back up, Amazon is going to be one of the leaders. To the top side, buyers need a breakout above 143.63 for a continuation towards these two price targets. Amazon is far from their bearish reversal point. However, if they do somehow move below 123.80 in the coming weeks, the next downside price targets would be 119 and 114. I hope you guys found this video helpful. Don't forget to subscribe and like, and best of luck for the week ahead.